Tankan's just out. This is for December. Big manufacturers, the DI, plus 12. So when that's a strong beat. Expectation has been for plus 10. Big non-manufacturers at plus 30, also a beat. Expectation had been 27. Small manufacturers, we were just talking about that, plus 1, when the expectation had been minus 4. So this is a little counterintuitive, don't you think?
No, they are just more optimistic than these nitty-gritty economists are, who are digging into the data very deeply and look at the global environment. The point really here is that companies have been driven by this point of, well, they can increase their prices, meaning they can adjust their business models. They have mobility to move, and they are also optimistic that the Bank of Japan and the government remain expandatory into next year, so that liquidity is not drying up as in the rest of the world. I think this is the reason for them to remain optimistic, and we just should take that as a positive signal.
All right, here's another bullet point coming out. All firms, Japanese companies that is, see the dollar averaging 139.35 yen for FY23 and 24. Big manufacturers specifically see dollar yen at 138.30. So in other words, they're looking for a significantly stronger yen from where we are now. We're pricing, 145.20 or so. And we've already seen that big jump from just weeks ago, 150, right? So does that make sense to you that corporates are more optimistic, according to the Tankan, even if they're looking for the Japanese yen to strengthen? I mean, does it suggest to you that they think a strong domestic economy and domestic consumption is going to more than offset that and, in fact, pick up all the slack?
Well, that bit of the survey is really slow rolling. So they came from a forecast of 133, and if they're at 138 now, we have to really look at the trend and not at the number that we are looking into in financial markets. They see the dollar now, the yen going to a point where it will be a bit stronger than it has been, beyond 150. This is also the market reaction after the Bank of Japan signaled a little bit that, well, policy cannot go on like this. And then the yen got quite a bit stronger until towards 145. I think the overall forecast of companies are in line with that. So that's more balanced view on the yen, right?
Martin, on balance, does this give the BOJ the latitude to normalise in mid-year 2024 or possibly even earlier?
Well, they are normalizing. I mean, they more or less have given up on their yield curve control policy by letting rates increase at the longer end. Now the big question is at the short end with the minus rates. And everybody's looking if they give up on that policy already next week. I doubt it, because they have been driven by the really weak yen that comes out of, well, so much liquidity in the market. Now that the yen is below 150, I think they will just stay where they are and wait in particular for wages to come out, wage negotiations coming out next year. The Tankan gives them all reason to, well, remain kind of optimistic, but they know the domestic economy is slowing. So I doubt that the Bank of Japan will move next.